Most of what we see in the insurance industry right now dealing with blockchain has been about synchronization and increasing efficiency in the back end of things and in the interaction of ecosystems of value. And I think we also should think about the impact that blockchain technology will have in the medium and in the long term, which actually deals with things like how are we going to deal with data, how are we going to be able to interrogate data, are we going to be able to actually assess risk, price risk, pool it and place it in a very autonomous type of way in platforms that do not have an underwriter behind them, and what does that mean in terms of regulation. So part of, there's two aspects to the risks associated with blockchain technology that actually deal with, one, how is it going to disrupt our business model and the way we mutualize risk, the way today we have a model that is based on centralized data, on ownership of data. A lot of our competitive advantages are based on the way we actually use data that we have. And we may transition to a world where that data is distributed, where we have portable solutions and there is data self-sovereignty. And if we look at spirits from regulation coming out like GDPR, there is a trend towards new ways of dealing with ownership, with provenance of assets, and with data. And part of those solutions actually tackle certain areas that augment the types of risk we can take on and the way we're able to mutualize certain types of risks. So for less complex risk, we may be able to just pull them and price them and place them in a very automated fashion. And in other areas, it will be very difficult to do that. Liability is a good example of that. So I think, one, there's risk associated with our business model and the way risk is mutualized. And then two, there is a lot of risks that are actually related to cyber. They are related to the sustainability of these platforms. They're related to the way they change business models in other industries. So a part of what we are doing is actually looking at those risks and being able to price them. Because yes, some will be regulated away, but actually the ideal world will be one in which we can look at the different blockchains, because there's not one blockchain, and the different ways they are structured, and assess in a fragmented way what risks associated with using that technology. So today, even if we don't use it as an industry, we need to be able to understand it, to price it, and to underwrite it. Because many of our clients and the industries of our clients are actually applying blockchain, and supply chain and logistics and transportation are some of the most common examples, but there's also applications on real estate and on energy markets. And many of the risks we underwrite today will at some point or may have the blockchain as a backbone, and we need to understand if that affects business interruption, if that affects the cyber risks, if that affects third-party risks, and for that blockchain as an ecosystem and the risks that's being generated by the very different models it is applying in terms of how they deal with our industry and other industries is a core part of what we should be looking at in the future. So yes, I mean, one of the ways we can actually look at the technology today to understand it, to start a process, is to say, well, let's use it as an excuse for automation and standardization that is long due, and let's start to apply it to reduce friction and to increase efficiency. And I think ChainThat has been doing a great job, for instance, in doing that, and there is other examples, and the consortia are actually tackling that. Why? Because it's low-hanging fruit, and because it is a way to actually understand the technology. The startup ecosystem that is native to this technology, or that realized that the technology would enable something like peer-to-peer models, they're not looking at that aspect. They're looking at aspects that change the business models. And then there is other industries that are not looking at either aspect and are applying the technology in areas where we will need to assess the risks of applying them. So to me, that's the future of the technology in the insurance space.